Ladies and gentlemen, good day and welcome to Indoco Remedies Q2 FY'25 earnings conference call hosted by Dolat Capital. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rashmi Shetty from Dolat Capital. Thank you and over to you, ma'am.
Thank you, Shika. Good afternoon, everyone. I, Rashmi Shetty, on behalf of Dolat Capital, welcome you all on the Q2 FY'25 earnings Concall of Indoco Remedies. I would like to thank the management of Indoco Remedies for giving us this opportunity to host the call. Today, from the management team, we have with us Ms. Aditi Panandika, Managing Director, Mr. Sandeep Bambolkar, Joint MD, and Mr. Pramod Ghorpade, CFO. I now hand over the call to the management for the opening remarks. Over to you, sir.
Thank you, Rashmi. Good afternoon, everyone. Thank you all for joining this call today. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are projections or estimates about our future events. These estimates reflect the management's current expectation of the future performance of the company. Please note that these estimates involve certain risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Indoco does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events or otherwise. Thank you. I'll request Aditi madam for her opening comments.
Yeah. Good afternoon, everybody, and once again, thank you for joining us. It gives me immense pleasure to let you all know that this August, the organization celebrated 77 years of excellence in providing quality medicines and building healthier communities. This has been a tough quarter for us, but let me share some of the general business highlights with you. As regards the India business, we have seen good growth in most of our key brands and majority of our therapies this quarter. Cyclopam, the number one product of the company, the antispasmodic analgesic, has recently crossed a prescriber base of 1 lakh prescribers in the quarter in this quarter, and incidentally the brand is also growing at close to 20%. During the quarter in the India business, we also launched new products, namely Pyrorexidin mouthwash, Sensodent Acipro, both in the dental ethical segment, and KTM 250 and 500 mg, which is a clarithromycin antibiotic in the ethical segment in our acute division. Steve Jobs once said about his life that there were good times and there were hard times, but there were never bad times. For whatever is worth, the international business at Indoco currently is going through difficult times, but very interesting changes happening inside the organization to prepare the company for the future, wherein, especially in the solid oral space, efficiency in manufacturing and agility of product basket are going to be the need of the hour, and the company is preparing for that. As you might be aware, we have close to 15 ANDAs in the solid oral space, of which at least 2 are great opportunities with tentative approvals for the future. Also, in the current basket which is being supplied to the US, we have some excellent products such as allopurinol, which are vertically integrated. The company has made tremendous strategic plans on a master manufacturing operation to harmonize products at various locations, to increase batch sizes, to bring down costs of testing as well as bring down other costs related to manufacturing. As part of this exercise, some of our plants are currently not in a position to supply all the orders that they have in hand. Added to this, we also have some challenges still in plant 2, which is our sterile unit, where there is remediation going on across various lines for manufacture of ophthalmics and injectables. This remediation is in line with US FDA's expectations. These two factors have largely resulted in our inability to supply product to the best of our abilities, and we therefore see the international business, particularly that to US and Europe, having been impacted. Having said that, I would also like to share that in this period, Indoco received the final ANDA approval from US FDA for lofexidine tablets 0.18 mg with competitive generic therapy designation with 180 days exclusivity. Indoco also received approval from WHO Geneva for albendazole 400 mg chewable tablets. Our contract research organization, AnaCipher CRO at Hyderabad, has expanded its offerings with the new Pharmacovigilance Services Fair. Sensodent K won the prestigious Rising Brands of India 2024 award in the sensitivity oral healthcare market. And we had a very successful launch recently of the new validated learning management system at Goa. This is all for me. I will now hand over to Mr. Sandeep to share the financial highlights.
Yeah, thank you, Aditi. Good afternoon, everyone. Hope you all are doing fine. Let me first begin with the business highlights. Net revenues of the company for the second quarter 24-25 shows muted growth at rupees 3,946 million compared to 3,942 million when compared to the immediate preceding quarter. EBITDA to net sales for the quarter is 13.4% at 529 million compared to 15.6% at 724 million for the same quarter last year. PAT to net sales for the quarter is at 128 million compared to 331 million. Earnings per share for the quarter is rupees 1.39 compared to 3.59. The above numbers are on standalone basis. We have declared results with consolidation, which include results of subsidiaries. Domestic formulation business. Revenues from domestic business for the quarter grew by 2.9% at 2,346 million as compared to 2,281 million for the same quarter last year. Major therapeutic segments, namely anti-infectives, respiratory, and cardiac, performed well during the quarter as compared to the same quarter last year. On the international business front, revenues from international business are at 1,262 million compared to rupees 1,949 million for the same quarter last year. Revenues from regulated markets are at 866 million as against 1,495 million. Revenues from US business are at 247 million against rupees 814 million. Revenues from Europe for the quarter are at 599 million against 634 million. Revenues from South Africa, Australia, and New Zealand are at 20 million against 47 million. And those from emerging markets for the quarter are at 396 million as against rupees 454 million. Revenues from the API business for the quarter are at rupees 301 million against rupees 358 million. And revenues from AnaCipher CRO and Indoco Analytical Solutions for the quarter are at 36 million against 64 million. That's all about the business highlights for the second quarter. I now request the participants to put forth their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mr. Rajat from Tata. Please go ahead, sir.
Yeah, hi. Thanks for taking my question. Am I audible?
Yes.
Yeah. Right. So, sir, as I can see, there is a capex of around 220 crores, which you have incurred in the first half. Can you just elaborate where this capex has gone?
Yeah, Rajat, Pramod here. So, CapEx primarily is for three reasons. One is specifically for the upgradation of the plants, which ma'am mentioned just now as a master manufacturing plant. We have been increasing batch sizes, putting new machines, replacing old machines. That is at all oral solid doses plants. That is one. Secondly, we are upgrading certain lines at our sterile plant at Goa 2. That is another capex. And a certain portion of capex, the amount which you mentioned, includes certain advances paid for two lines which we already ordered, one injectable and one optal. So these are the three major capex which happened during last 6 months.
So incrementally from here, how does the capex guidance look like?
So this year, as previously also we guided close to about 200 plus crores. Out of that, close to about 180 odd crore is already incurred. So we don't see much, incremental capex in remaining 6 months or so.
Sure. So last question from my side. If I look at your Q-on-Q performance, I see there is a very sharp increase in other expenses. They are up by roughly around 27 crores, while your sales is up only by 6 crores. Can you just tell us why your other expenses have moved increased at such a sharp rate?
Yeah, sure. So Rajat, if you see as compared to quarter one, the expenses are increased by about 20 odd crore, particularly in over various sales promotional activities, advertisement, sales promotional activities, and travel of field. We have increased certain field force, and travel related to that field force is also a part of this other expenses.
There is also some increase in commissions and incentives, yes, since our acute divisions are doing very well.
Yes.
Yeah.
Sure. Okay. Thanks.
Thank you so much, sir. We have next question from the line of Sudarshan, sir, from JM Financial. Please go ahead, sir.
Yeah, thank you for taking my question. I would like to understand, I understand that US is a bit of a problematic zone for us right now, given the remediation, etc. But can you elaborate why we are seeing a decline in Europe as well as emerging markets?
Yeah, so I think Europe and emerging markets are two different things, but there is one common thing for both these geographies is that both the plants supplying to emerging as well as Europe are also under the master manufacturing plan upgradation. So while we have tried our best to stagger it, somehow in Q2 it was not possible anymore to keep things pending, as they would have hurt us in future. Just to give you our Europe and US plants, although geographically we say Goa makes for US and Baddi will make for Europe and Varuj will make for emerging. As part of our attempt to have a very agile operations management system, we are trying to align the portfolios at various locations, and therefore whenever a location comes under renovation to meet with the blueprint plan for as per the master manufacturing organization, a particular product to both geographies suffers. So somehow in this quarter that has happened, and one of our larger manufacturing unit which supplies to Europe particularly is under remediation, not because regulators want it, but for us, because we have decided that that is how going forward we'll get far more output from the same unit at much lesser cost per unit.
Apart from US, how far are we in terms of fixing up and ramping up for the other locations? Europe and US. I understand it's always good to harmonize the quality and others that you said.
Yeah. You're asking for solid orals?
Yeah, for the solid oral, I'm just trying to understand now that, has most of the practices and the processes been implemented in the other geographies outside the US.
Yeah, what was your question exactly?
No, earlier, we have seen impact in Europe and, other regions as well, the semi-regions, and we are basically trying to harmonize, if I understand, put things in practice. So I'm just trying to understand, one, as you work with the US FDA, which is mandatory. The others you are working because it is more voluntary. So has majority of the voluntary work being done for Europe and, the emerging markets, and we should start seeing the growth?
Yes. Because, it depends. I think the perspective is very important to decide what is mandatory and what is necessary and what is voluntary. I think we are all aware of what is happening globally with increasing freights and yo-yoing in cost of goods, and particularly in US with drop in prices. I think our corporate operations planning have sat together with the business teams of Europe, US, as well as emerging markets. And we have made a plan which will allow us to ride through these kind of rough phases. And therefore, you may say it is voluntary, but we feel it is mandatory if we are to, going forward, show better efficiency and better EBITDA margins, both in Europe as well as US.
Sure, ma'am. The next question from my side is on the gross margin. If we are looking at, the API prices, largely my understanding is the chemicals and API prices have remained kind of behind. Would the drop in the gross margin largely be because of, the mix, the regional mix that we are seeing, or are we seeing any kind of a cost escalation on our raw material?
Which period you are looking for drop in GC?
So I am primarily looking at the second quarter and probably in comparison with the last year as well as
I think, gross margins and COGS and other operating. So because at least two large plants are under this kind of, staggering shutdowns, planned or compulsory, the operating costs at those sites, other than the material costs, are of a fixed nature, right? So they remain. So finally, that is how the margins get impacted. Is that your question?
Yeah, that explains below the gross margin, but we have also seen the raw material prices increase. Is that primarily because of the mix, or is it primarily because the raw material prices have gone up? I just wanted to understand that more.
So, Mr. Sudarshan, if you see the raw material prices, the overall trend is on a decreasing side. Of course, not significantly, but certainly we are looking at certain key raw materials at a lower level. Of course, the impact of the same will reflect going forward in next couple of quarters.
But yes, product mix does matter.
Yes.
Because as of now, when with steroids being really down and whatever business for US has come, it's come from solid orals. So naturally, that impact would be seen in the GCs. A. B. Also, like we have explained in earlier calls, the company is in a transformational phase. In the past, quite a substantial portion of our revenues for egg markets used to come from milestones, as well as royalties or profit share, etc. But less of profit share and more of milestone. Now that Indoco has a front end in US of our own, and we are therefore keeping IP for ourselves, there is a minuscule amount that is coming from that. So rather than the GCs have gone down, the entire sort of portfolio mix or product mix of the business has changed. So in order to keep margins for us in the future, we are kind of foregoing milestones currently. Does that answer your question?
Yes, ma'am. And going forward, what should be the trajectory that we should expect in the near term as well as, say, in FY'26 or so?
See, I think you can appreciate the last 2 quarters, at least Q1 was all right. We saw some impact of these supply constraints. Q2 has taken a maximum impact. Q3, while we remain optimistic, I have to say there would be certain constraints. So at this stage, I would want to wait for another quarter before I give guidance for the future.
Sure, ma'am. One final question before I join the queue. I think, if I look at the data on the brands that you had given in the press and also, the AIOCD data and the growth that we are seeing, it looks like our, brands are doing fairly well in the secondary market, but, the primary sales is a little lesser. I mean, what would be the reason, and should we see a catch-up playing going forward? I mean, should the secondary start reflecting as the primary data in terms of better growth as we start moving towards the third?
Okay, I think when you say secondaries are good, we are looking at IQVIA or PharmaRack data, and primary we are looking at internal. Is that it?
Yes.
Okay.
That's it.
So I think when you look at the internal data of IRL standalone, you have to factor in the aspect that 2 large toothpastes are now with the 100% subsidiary Warren Remedies. So the base sale of these 2 toothpaste continues to be there in last year's sales, which is why if you look at growth on primary, it would appear that we have not grown. Does that answer your question?
Yes.
Yeah.
That answers it. Thanks a lot, ma'am. I'll join back with you.
Thank you so much. We have next question from the line of Ankit Minocha from Daisy Ventures. Please go ahead, sir.
Yeah, hi, good afternoon. Am I audible?
Yes.
Yeah. So, firstly, I mean, in terms of was there another visit from the FDA in the last quarter?
Your voice is not very clear. I'm getting a lot of echo, maybe. If you can.
Yeah, is it better now?
Yes, much better.
Yeah. So, this is regarding a notification that was put out that there was another visit by the FDA on the Goa 2 facility. So, and there was an OAI indication. This was also the status in the past. So, what exactly happened here? And when do the plants get back to the remediation getting over and the plants getting back to running?
Yeah. So in 2023, we were audited by US FDA, and after that audit, the plant was classified as OAI. While there were not any issues directly related to data integrity, cleaning validations, or any such procedures, for a sterile unit, FDA had cautioned because they felt that the plant was old and certain areas need remodeling so that more space is created. Also, some of our lines were very old, and FDA expected us to move from glove ports to the future isolator based lines, etc. So and therefore we were classified as OAI. After that, we have submitted an outline plan to US FDA of how and when we propose to make these changes and complete the job. And accordingly, routine updates have been going to US FDA. As per this plan, much of the work was to be completed by the end of 2024. Now, to our surprise, US FDA once again came in July 2024. While the lines were actually opened up and not ready for any kind of audit, etc. And from this audit, there were 7 observations, and we have responded to those observations, and again we have got the same status OAI. So basically, the way we look at it is once all the remediations on lines is over, US FDA is likely to come back for an audit before it can change the classification of the site. Does that explain your question?
Yes, it mostly does. So just carrying on from there, in that case, I believe in the earlier Concalls, we were expecting this remediation to get done by maybe Q3. So does that then now put a delay onto the entire process? And by when do we expect the facility
So we still expect the remediation to get over by quarter 3. Whether FDA coming down is going to or not coming down is going to hamper commercials from this site is something that we'll have to wait, simply because we have continued the OAI status. But our technical teams are in continuous dialogue with US FDA to try and understand their concerns and understand how we have to move forward now. Because I don't know, there was some when FDA walked in, I think they misunderstood and felt that we would be ready in November 23 and not November 24, which was really odd, because all our communication said November 24 or later.
Okay. All right. And my second question is then coming to, I mean, if I look at operating margins on a consolidated level, I mean, I look at the times in 2015 to even 2018-19, where these margins used to hover around much higher levels, and currently at this quarter on the consolidated level, it's, I think the OPM is 9%. And so I just wanted to understand from your top view of the business, where do you see this number kind of, the OPM on a consolidated level, where do you see this number go for this year or as well as next year, if you can outline some sort of trajectory considering all the challenges the business is facing?
Right. So, like I said to one of the earlier questions, at this stage we don't feel is the right time to give guidances. But I can help you understand why the consolidated picture is the way it is. So for consolidation, we have 2 subsidiaries for which sales are consolidated into the company, which matter more. One is Warren Remedies, which is taking 2 of our toothpaste OTC, and also manufactures a few intermediate APIs for us, for Indoco. The second is the subsidiary FPP, which is Florida Pharma, which is our vehicle for launching product in US. So Florida Pharma is actually quarter on quarter has made great progress since its acquisition only more than a year and a half ago. And we feel very confident in the next 6 months, especially after the supplies to US start smoothly. We expect the drain happening through SPP on the corporate to come down. Coming to Warren, where the 2 toothpastes are in the market, this is a phase where, as part of the whole OTC, product launch, awareness, digital marketing, television marketing, certain expenses, especially on the promotion side, are a little bit higher. But that is something which cannot be delayed. As a consequence of that, Warren Remedies is also on the negative, and the consolidated picture appears like this more because the parent Indoco revenues are very short in comparison to the running costs for the organization. As explained earlier, because our international business we have not been able to supply and collect revenues against international business. Okay?
Okay. Yeah. Thank you. I'll come in the queue for further questions.
Yeah.
Thank you. We have the next question from the line of Abhishek from Padmaja Investment. Please go ahead.
Yeah. Am I audible, madam?
Yeah.
Yeah. So my question has been partially answered. On the European part, you are done with this master manufacturing plan process, and can we expect the ramp up from Q4? That's my question 1.
Yes, we can.
Okay. So the European part is done, emerging market part is done. US, so this current, and were there any repeat observations? So currently we received like 7 observations and last time was okay.
But none were repeat.
Okay. And like, will this take like another 1 year to again get this classification changed?
No. I don't think it should take 1 year. Had they not come in July, I feel by Q1 of 25, they would have been the latest when they would have come down. Now that they've just come in July, we will stay optimistic to bring them down. And also, we are in talks with them to understand, and I don't think current supply is out of that site. So once the site comes up and gets remediated totally and fully ready, I don't see why we have to wait for FDA audits to start supply.
But we won't be getting new approvals.
Yeah, but that is not... yeah, we have enough approvals, and actually our order book both for US and Europe is very healthy. So that is not very disturbing, and neither are we missing out on any big deadlines for any para 4. So that is not a big concern right now. Right now for me, the urgency with which we can finish the projects, and there are 4 lines. So one line is up actually just now as we speak, and every 15 days a line will come up. So the question is whether FDA will want for all 4 lines to be going before they agree to come down. We are asking for a call with them since they have recently come and seen our site. We would like to understand if they have any other concerns. All that is going on, and I'm hoping in the next call when I speak with you, I can give you a much better guidance.
So Q3 also there will be improvement sequentially compared to Q2.
Look, US business is not, so US business is not all about sterile for us. We do have a solid oral plant, which is plant 1, and there is a small amount of business we have currently of solids. That also work is going on to ramp it up. So there will be improvement surely. But as you rightly said, Q4 would be probably a better time for us to see upside coming from smooth functioning of plant 2.
So on the Europe part, it is completely done now, and in Q3 also it's on full ramp up?
Europe is almost done, yes.
Okay. But revenues haven't started, like optimally.
No.
What? Okay.
They were impacted rather, yeah.
Okay. Thank you, madam. That's all.
Thank you. We have next question from the line of Ankit Mitra from Phenomics. Please go ahead.
Am I audible?
Yes.
Good afternoon, madam. Thanks for taking my question. My name is Anik Mitra. Ma'am, my first question, I have a couple of questions. The first one is related to the OTC, like whatever the advertisement or the promotional expenses have been added to the other expenses. As OTC products, these are all for the OTC products, right? So going forward, like this OTC products, we will keep on adding, and so this will this expenses, this promotional expenses, be there going forward?
So typically, if you are aware, there are various categories of products. So you have frank, ethical, then you have BTC, as it's called, behind the counter, then you have OTX, and then you have frank OTC. So depending on where your product is positioned, the amount of expenditure that is required is different. Not all the products we intend to take beyond ethical will always go frank OTC. These 2 toothpastes had to go frank OTC because the largest competitor we have, which is Sensodyne, has almost close to 70% of its revenues coming from channel outside ethical. That is chemist. Meaning they sell at grocers, they sell with modern trade, and they sell even with the panwala. So we have to go there, and since this kind of a supply chain expansion, a shift in the structure of how goods are distributed, in order to keep your new SDs and new purchase partners and the GTs, that is the grocers, sort of positive on the product. Because they don't know this product, right? The chemists know the product because it's been prescribed for doggone years. So for the channel partners also to get confidence, the company has planned strategically the kind of inputs that we would require, specifically advertising on television and digital spend on YouTube, Facebook, etc. And we have been doing that. Coming to your question, future products as they come, as they go OTC, will this spend remain? No, it doesn't mean that with every product this kind of a spend is there. Also, sometimes for the first time when a company goes OTC, such a spend is required, and that's what we are doing.
Okay. So maybe a small component may be there. A small component may be there.
If I were you, I would concentrate on growth in sales because we have gone OTC. Because the whole thing about going OTC is getting a much larger market from which to get share. And while this expenditure initially is like an investment, and we should be prepared for that. Yeah.
Okay. Ma'am, my next question is, what kind of revenue addition can you expect from this OTC product in FY'26?
So the two right now only 2 toothpastes are there with some various SKUs as in pack sizes, but largely they are just 2. And these 2 for the current year we expect them to do in excess of 120 crore, which would still be a decent growth over their I think if I'm not mistaken, when they were in ethical it was around 85 or 90 CR. So this is the first year, but as the awareness with consumer, the reach to consumer, we incidentally now subscribe to Nielsen data also, where we measure what is called weighted and numerical distribution, where we are consistently seeing a month-on-month 15% increase in the counters at which the product is being carried. These are all kind of foundation activities to prepare for a much larger sale as we go ahead. So I am very confident, and I feel surely and certainly that in the second year we can definitely expect 25 to 30% growth from these 2 products itself.
Okay, great. That's great. Ma'am, do you position your products in this toothpaste with the normal toothpaste, or do you consider it as only the peer of Sensodyne?
Not necessarily only Sensodyne, but sensitivity market. And as per Nielsen, in the sensitivity market, we are number 2 to Sensodyne.
Okay, I got it. Thank you so much. Best of luck, ma'am.
Thank you.
Thank you. We have next question from the line of Mr. Sudarshan from JM Financial. Please go ahead, sir.
Yeah, ma'am. Thank you for taking my call-up. I would like to understand a little bit more on the debt side. If I look at the long-term debt, we have seen some kind of an increase, and also the short-term debt we have seen, kind of an increase. I mean, historically, we never had an issue in terms of interest cost, but given the negative operating leverage, I mean, if we look at the interest today and the first half, it is slightly higher than what one would have expected as compared to what we have ever seen in the past. In the context of, one is if you can throw.
Hello? Yeah, I think his line got cut.
Sorry to interrupt, ma'am. The line from his side got disconnected.
Oh, shall we wait for him to join back?
We can proceed with next question.
Others, okay.
So the next question is from the line of Ankit Minocha from Adezi Ventures. Please go ahead.
Hello?
Please go ahead, sir.
Is there a problem in the line by any chance, ma'am, since the second caller also is not able to speak?
Give me a moment, ma'am.
Yeah, Sifa, can you hear us? Rashmi?
Sorry for the interruption. Please go ahead with your question, sir. Taking the next question from the line of Bhavani Desai from Turtle Capital. Please go ahead.
I think I'm not able to hear them.
Sifa, Rashmi, can you hear us? Hello?
Sir, just give me a moment.
Sure. Hello.
Mr. Dhanil, you are on talk mode. Please go ahead.
Hi, am I audible, ma'am?
Yes, yes. Please go ahead.
I have one question on the U.S. business. For the U.S. and, move the business model from kind of licensing out our brand to front end, developing our own front end. So can you talk a bit about, how long this transition is going to take, and whether, all the existing brands and the registered products will also get transferred here? And if so, what is the timeline? If you can talk a bit about that.
Yeah, thank you for the question. So, no, in answer to your question, not all products which were licensed out are being brought in, but further products are not getting licensed out. So the milestones, therefore, are not coming in. We have some excellent relationships with other front-end partners in US, with whom we are quite happy, especially in the solid oral space, and those continue. Much of the ophthalmic and sterile opportunities, though, we would prefer to do through SPP going forward. Many of the products which we had licensed out to Teva, for example, are now back with us as part of the arrangement, and those are also being relaunched through FPP. Does that answer your question?
Yeah. So approximately what percentage of your portfolio now is back to you and now going to front end, existing one?
Volume and value are two different things, because you will get volume in solid orals and value in ophthalmics. So roughly I would say around 60-40, with 60% going with FPP and 40% still through others.
Okay. And that 40% is now currently everything is now through FPP, right?
No. 60 would be through FPP. 40 is currently with other partners.
So 60% is already done by our own front end currently.
Yeah, planned to be done once the supplies are done.
It's not been done.
No.
Got it. Thank you, ma'am. That's it from my side.
Thank you. We have next question from Ankur Agarwal from RC Business House Private Limited. Please go ahead.
गुड इवनिंग मैम, जिस तरीके की कैपेसिटीज हम पे है और जो प्रोडक्ट लाइन हम पे है, ये टेम्परेरी पेन्स को अगर हटा दें तो आने वाले 3-4 साल में क्या ग्रोथ मैनेजमेंट प्रेडिक्ट करता है कंपनी के अंदर ऑपरेटिंग प्रॉफिट्स में एंड टॉप लाइंस में?
हाँ, थैंक यू फॉर द क्वेश्चन. आपने सही प्रश्न पूछा है. The kind of things that I said earlier, literally we are looking at incrementally getting 50% more from each of our sites, each of the factory. So हर एक फैक्ट्री से 50% ज़्यादा आउटपुट आ सकता है सॉलिड ओरल्स का. सिर्फ यही नहीं कि हर एक बैच की भी कैपेसिटी बढ़ाई गई है, तो टेस्टिंग कॉस्ट एसोसिएटेड टू इट, with it, process times required to manufacture each batch is being reduced, and I would not like to unnecessarily commit, but I'm actually hoping that as the numbers come out, you will see the beauty of what this kind of restructuring does. But अगर आप पूरा बिजनेस हमारा समझे तो इंडिया बिजनेस जो है वो ब्रांडेड है और इमर्जिंग मार्केट का बिजनेस भी ब्रांडेड है. यूएस बिजनेस जेनेरिक है, वो भी पहले जेनेरिक सपोर्ट था, अभी हमारा फ्रंट एंड है तो आगे चल के हमारा हो जाएगा. यूरोप का जो बिजनेस है वो 90% आज भी कॉन्ट्रैक्ट मैन्युफैक्चरिंग है, और इस तरह के बिजनेस में आप अगर देखें तो यूके में जो पैरासिटामोल बेचा जाता है उसका 50% मार्केट हमारे पास है. तो जब आगे का मार्केट इतना बड़ा कैप्चर कर दिया है हम लोगों ने, तो जब इसकी एफिशिएंसी बढ़ जाती है तो डायरेक्टली कंपनी के मार्जिन पे इसका बेनिफिट आ जाता है. और वी आर वेटिंग फॉर दिस काइंड ऑफ ब्यूटीफुल थिंग्स टू कम आउट एंड शो बाय वे ऑफ प्रॉफिटेबिलिटी.
फिर भी कुछ इंटरनल टारगेट्स होते हैं, जैसे कि मतलब 3-4 साल में
मैंने कहा, हाँ समझ गई मैं. वी आर एक्सपेक्टिंग फ्रॉम अ एबिटा पर्सपेक्टिव एटलीस्ट ग्रेट इंक्रीमेंट टू हैपन, बट बिकॉज ऑफ व्हाट वी आर गोइंग थ्रू राइट नाउ, आप समझ सकते हो कि I would prefer to wait for one more quarter before I give you these numbers.
Okay. And जो यूएस में बायोसिक्योर एक्ट पास हो रहा है या हुआ है, उससे कुछ हमको बेनिफिट मिल?
बायोसिक्योर एक्ट से सीडीएमओ बिजनेस जो है वो इंडिया को बहुत सारा मिल सकता है. इसका हमें डायरेक्ट इम्पैक्ट फ्रॉम अ मैन्युफैक्चरिंग साइड हम बायोजेनेरिक्स और बायो फार्मास्यूटिकल्स में आज की स्थिति में नहीं है, तो डायरेक्ट मैन्युफैक्चरिंग का एडवांटेज नहीं मिल सकता है. लेकिन इससे एसोसिएटेड जो रिसर्च है, यानी कॉन्ट्रैक्ट रिसर्च टू डू पार्ट्स ऑफ द वर्क, एनालिटिकल रिसर्च, हमारी एनालिटिकल सर्विसेज डिवीजन है, इसको रिलेटेड इससे रिलेटेड जो बायो स्टडीज होंगी उसका बिजनेस जो सीआरओ को मिलेगा, वो सारी एडवांटेजेस हमें मिल सकती है.
तो नॉर्मलाइज बिजनेस हम समझते हैं कि अप्रैल 2025 के बाद से सब चीजें इन लाइन आ सकती है.
हाँ, थैंक यू वेरी मच.
ओके, थैंक यू मैम.
Thank you. We have next question from Sudarshan from JM Financial. Please go ahead.
Sorry, I got locked up. Ma'am, I would like to understand on the debt side, if I look at, from March to September, both on the long term as well as the short term, there has been an 80 crore addition each. More or less like 140 to 150 crore addition. I understand that there is some capex that we are undergoing additionally to the working capital. I mean, if I look at it on the context of, the operations, we never had an issue on debt, hitherto, but given the fact that, our margins are contracting because of various reasons, it tends to impact the profits. Can you give some color on how do we see the debt, evening out, say, in the next couple of years or so? And second is, on the PAT, given that the first half is a loss, it's more of a bookkeeping question. Should we take, lower tax rate, taking the benefit of the losses that we have made in the first half?
So let me answer first on the business, and then I will let Pramod take on some of your sticky issues on the borrowings. So you said, I think there is something you said which I feel needs correction. You said margins are contracting, which is actually not true. Margins are not contracting. The efficiency we are bringing in is to increase the margins, and also to prepare for the kind of business we are expecting both from Europe and US going forward. The enhancement in capacity is being done. So, it is correct from your side to wonder why so much capex is being companies incurring capex, whereas on one side, historically also you must have seen that utilization was less. There is a very funny aspect of capacity. How you calculate capacity is also very important. What has happened in the generic space, especially in US, and of course UK for doggone years, is that in order to ride over the kind of price drops, etc., each manufacturing unit has been trying to do a multiple or various kind of product mix. This kind of a mix, when it comes to operations, poses all kinds of challenges, whether it comes to line change, especially in sterile with the media fills, etc., etc. And eventually the unit becomes less agile. So on paper, it would look like 60% capacity is utilized, but finally when you ask them to make one more batch, they have lost so much of downtime that they are not able to cope. What we are doing right now as part of the Master Manufacturing Correction Plan is to bring down all such things. So it might appear to you right now that the company is investing when it may not have required these investments. But trust me that the investments that are being done now are to prepare for a time when the huge volumes will start. I'll let Pramod now explain to you about the borrowing.
Yeah, thank you. So, Mr. Sudarshan, if you see, as compared to March, our long-term borrowing for Indoco has gone up by about 54 crore. Primarily towards the capex, what we discussed in detail in our call, the master manufacturing initiatives and the site to certain upgradation and the new lines. So that is the primary reason for increasing long-term borrowings. Short term also, it is increased by close to about 60 crore. So that is all investment into various new initiatives, what we have carried on. Then there is a slight, increase in borrowing in Warren, one of our subsidiary. Again, that is towards the capex related to Warren new business. API finished goods lines we are just order, and we expect that to get finished within next 6 months of time. So primarily increase in borrowings towards creating new capacities, investment for the future. In one more area, that is particularly on the stability lab. So we have now centralized stability newly created at Waluj. So plan is to basically move most of the stability labs spread across various plants to this one central place to bring in efficiency, to reduce cost. So all this is for investment for the future, Mr. Sudarshan.
Yeah. So, and what would be the debt to EBITDA that you are comfortable? Do we have any number on the mind over the long term?
Not really. So as we discussed, we don't expect much of the capex going forward. It will be like a running maintenance capex or so, but that most probably will be able to absorb through our internal accruals. But maybe incrementally, may close to about 40 to 50 crore may require intermittently, but not beyond this amount. And I missed your one question, that is on taxation. So we are already on a lower tax rate, Mr. Sudarshan, Indoco, at this point of time.
Sure. Thanks a lot. I'll join back.
Thank you. The next question is from the line of Abhishek from Padmaja Investments. Please go ahead.
Yeah, my question is on, so currently we have like close to 25 pending ANDA approvals, right, when it comes to US? Close to?
Yes.
20, yeah.
Yeah. Of this 25, how many will be like sterile and ophthalmic products versus solid oral?
If I'm not mistaken, close to 6 are solid oral and the rest are sterile.
Okay. And are there any para 4s and first to files also in this?
I think you will appreciate that we have stopped giving this kind of disclosure now.
Oh, okay. Thank you. Thank you. That's it.
Thank you. The next question is from Maulik Varia from B&K Securities. Please go ahead.
Hi, thank you for the opportunity. I hope I'm audible. Ma'am, just wanted a little clarity. So your facility supplying to emerging markets and EU were under renovation under the master manufacturing plan. So I might have missed the point, but when is it expected to be completed, or has it been completed by September end?
So we have 2 sites supplying to Europe right now and 1 for emerging. The emerging site is almost done. One of the European sites is done. The second one is almost complete.
Okay. And during the Q2, were the sites completely shut for some number of days?
Not all. One of the Europe site was almost not available, and the other 2 were partially available.
Okay. For the entire quarter?
Yes.
Okay, ma'am. Thank you so much.
Thank you so much. We will be taking that as our last question. I would now like to hand the conference over to management for closing comments.
Thank you all for the very interesting questions which has allowed us to express our position. Thank you very much and have a good day. Thank you.
Thank you.
On behalf of Dolat Capital, that concludes this conference. Thank you for joining us. You may now disconnect your lines.